Friends, welcome back to US Stock GPS. On December 19, the stock MIRM surged 10.6% on heavy volume. So the big questions are, why did it spike? Does this move have a real logic behind it? And can we still enter now? So I quickly went through the news. I came across an article saying the company announced an additional private placement financing. If you're like me and you're not fully sure what private placement really means, then you definitely want to watch this video to the end. I pasted the article into ChatGPT and asked it to break it down for me. ChatGPT explained it in 3 parts. Part 1. What happened? MIRM announced that it will sell 1 million new shares to institutional investors through a private placement priced at $68.48 per share, raising about $68.5 million. On top of that, earlier this month, the company had already announced another $200 million private placement. So in total, the new capital raised is roughly $268.5 million. ChatGPT also seemed to understand why I asked for the explanation, and it clarified what a private placement actually is. A private placement means shares are sold directly to large institutional investors, not to retail investors in the public market. These shares are not immediately tradable. Later, the company typically files with the SEC, so those investors can eventually resell the shares. In short, it's a faster and more efficient way to raise a large amount of money from institutions, and it's often used for acquisitions or major strategic projects. Part 2. Why is MIRM raising this money? According to ChatGPT, the cash will be used to fund the acquisition of Bluejay Therapeutics and support clinical development and commercialization afterward. MIRM plans to acquire Bluejay Therapeutics in Q1 2026, a private biotech company focused on viral and liver diseases. So this financing is essentially deal financing, raising money to complete and integrate the Bluejay acquisition. Part 3. What does this financing mean for existing shareholders? First, it means dilution. MIRM is issuing new shares, which increases total shares outstanding. That means existing shareholders' ownership is slightly diluted, and all else equal, EPS gets diluted as well. However, if Bluejay creates meaningful value in the future, such as new drugs, revenue, and a stronger pipeline, then over time, that value could offset or even exceed the dilution effect. Second, the placement price shows how institutions view valuation. The private placement price is $68.48 per share. Here's how to interpret that. Institutions were willing to buy at that price, which suggests they accept that valuation. If the market price is near or above $68.48, it can be seen as a form of validation. If the market price is far above that level, it may create some short-term overhead pressure. If the market price is below that level, the placement price could act as a support reference. So $68.48 becomes a kind of valuation anchor for the market. Third, there may be future overhang risk. These private placement shares are restricted at first, but once they become freely tradable, institutions may choose to take profits, which could create potential selling pressure, also known as an overhang. Then ChatGPT summarized the strategic signals behind this financing. Management is firmly committed to the Bluejay acquisition. They're willing to accept dilution in exchange for future growth. Institutional investors seem to believe the combined company could be attractive. At the same time, it also shows that executing this strategy requires significant capital. This is actually very common in biotech. Raise big money, acquire pipeline assets, and hope future drug success proves the dilution was worth it. ChatGPT also highlighted the key risks. If Bluejay underperforms, integration is slow, trials fail or are delayed, or biotech sector sentiment weakens, then the share count increases but the value doesn't grow, and the stock may underperform. Bottom line, is this good news or bad news? ChatGPT viewed it as mostly positive if Bluejay has strong assets, clinical data succeeds, and the acquisition accelerates MIRM's growth trajectory. In that case, today's dilution could mean a much bigger company value tomorrow. Then ChatGPT asked me whether I'm considering Merm as a potential investment and said it could help judge whether this financing is strategically accretive or whether it's a dilution red flag given Merm's valuation and pipeline. I told ChatGPT I was considering buying the stock, and it then analyzed what this price spike likely means and whether and how to enter. Why did Merm spike so hard? This surge was very likely driven by the financing announcement tied to the BlueJay acquisition. The key drivers. The new capital provides funding, security for future growth and deal execution. Institutional participation signals confidence from large investors. Biotech stocks often react strongly to financing news linked to strategic actions, especially acquisitions, not just raising money to fund ongoing losses. In other words, the market is rewarding the financing plus strategic expansion narrative, not random trading noise, technical and price action. From the chart, the stock broke above multiple moving averages, such as the 10-day, 30-day, and 50-day. Volume was more than 5 times the 3-month average. This suggests real conviction buying, not noise. The breakout happened across multiple timeframes, signaling a sentiment shift. If fundamentals can keep up, this may not be a one-day spike, it could be the start of a new uptrend. Why might investors keep buying after the breakout? After this type of breakout, investors often add because A, financing reduces near-term liquidity risk and short-term funding uncertainty. Institutional participation acts as a positive stamp of approval. Instead of just burning cash on trials, the company is acquiring a potentially stronger pipeline asset. If Mirum keeps hitting milestones, BlueJay pipeline progress, clinical data, execution new catalysts may appear. What risks still remain? Even after a big spike, the core risks don't disappear. Regulatory and clinical risk, both Mirum's programs and BlueJay's pipeline must succeed. Any FDA setback or data delay can reverse gains quickly. Execution and integration risk, biotech acquisitions often don't meet expectations. Future dilution risk before profitability is fully established, the company may still need additional financing. Should it be added to your portfolio? Decision framework. ChatGPT provided a simple decision model. If you're a long-term investor, 1 to 3+ years, consider scaling in, for example, 20% now and 20% at the next milestone, rather than going all in at once. If you're a short-term trader, enter with a small position and a tight stop. Define a target, like 8% to 15%. If you're conservative, wait for the next fundamental catalyst, clinical data, or BlueJay integration progress, and watch if the stock can hold above key moving averages to confirm the trend. ChatGPT also mentioned that after a 12% rise, the valuation is more expensive in the short term. An upside may be more limited unless new catalysts arrive. But many times, stock prices move before catalysts, meaning this move could be pricing in good expectations. My own quick fundamental check, I also did a simple fundamental review myself. From 2021 to 2024, the company's revenue grew at a very high 160% CAGR. As of 2024, EPS was still negative, but losses were narrowing. In the latest earnings report on the 4th of November 2025, EPS turned positive to $0.05, beating expectations by 135.66%. Cash flow also turned positive. On the technical side, Merm is up about 300% over the past 3 years, with a mild pullback in recent months. Now, driven by this financing news, the stock is moving up again. ChatGPT was very positive about the financing itself, but still categorized Merm as a speculative biotech stock. However, the latest earnings show profitability is starting, cash flow is positive, and revenue is growing rapidly. So I believe the stock is transitioning toward an early stage growth phase. So I decided to buy. I started with a small entry, about 10% of my target position, which equals roughly 3% of my portfolio. Then I plan to scale in gradually up to 30% of my target and wait for the next catalyst. Final thoughts. What AI helped me do. This entire process took only a few minutes with ChatGPT's help. Without AI, doing it manually would easily take tens of minutes. ChatGPT made the analysis more professional, more structured, and much more efficient. I hope that going forward, everyone can use AI tools to improve investing efficiency. All right, thanks for watching. If this video helped you, please subscribe, like, and share. See you next time.